Thank you for joining us, Jean-Baptiste. Looking forward to your talk. So Jean-Baptiste, I'm probably going to butcher your name, but Aboyitungiye
Yes.
is from the Central Bank of the Republic of Burundi, and we'll be speaking about the role of central banks in the face of economic and financial risks linked to climate change. So yeah, with that, we can go ahead and get started. Jean-Baptiste, thank you for joining us.
Yes, of course. Thank you very much. Thank you for stipulating my name very good, because I thought maybe that will be difficult for you. It's Aboyitungiye Jean-Baptiste from the Central Bank of Burundi. Yeah, of course. I'm working in the Central Bank in the research department. So here I'm going to present my topic. I will be focused on the Central Bank in relation of the climate change policies, especially in sub-Saharan African economies. Okay, so here I'm going to talk a little bit, like it will be theoretical framework. You will see that my presentation will not contain not enough data on sub-Saharan African economics, because that is the new policy that I'm suggesting for central banks, especially for African, to put in their policies. So the role of central banks in the face of economic and financial risk linked to climate change, and what are challenges for African economy. So by explaining a little bit about what is inside of my presentation. I go by telling you that climate change and climate policy affect the bank balance asset and of course the business model in different ways. So the way that the climate change affect Central Bank of Africa and Central Bank of European or Asia are not the same as we are suffering in Africa, because the regulation or the funds that we have for combating the climate change are not the same as we are emerging economies or development economics. We have different ways to prevent those climate change that are affecting our balance asset or business model. So African banks are vulnerable to the increasing frequency and severity of climate change related shocks. The shocks that are coming from the change in climate are affecting our economy on different sides. So the environmental factors will lead to a deterioration in banks' credit quality and profitability over the long term if banks do not take steps to prudent manage climate and environmental risk. Of course, we will have on our mission, of course, the different mission of central bank are different, of course. So the bank or the central banks, if are not providing solution to the climate change, they will have to struggle to reach the emissions, if of course, because shocks from the climate change are totally affecting that mission. So here in my presentation, how are African banks coping with the climate change? How they are inserting some policies in what they are doing now, of course, in the projection by, for example, targeting inflation or targeting those commercial bank rate, the commercial bank rate. Of course, how African banks are coping with this by inserting the climate policy, of course, to reach that target that they want. And then, how do climate-related risks threaten the operation of banking institutions and the stability of the financial systems? So in this presentation, you will see that the initiative taken by many central banks of Africa, when I'm talking about Central Bank of Africa, I'm not involving that from South Africa and North central banks, because the central bank, they have a different mission with those from the sub-Saharan Africans. That's the reason why I'm focusing on those sub-Saharan Africans countries that are in developing the economy, or of course we can say that are the poor economy. Okay, so this presentation will highlight the initiatives taken by banks just to implement a sustainable practice and to create an environment conducive to sustainable finance, drawing on best practice, drawing of course on European banks or Asian banks that they have already the policies, they have already included the policies of climate change just to achieve the emission, because that the climate change is the shock from, of course, external shock from out that will come to destabilize the central bank's missions. Okay, so here, what are, of course, climate vulnerabilities that we have here in Africa? So my country here is Burundi. So by climate vulnerabilities here, we can say that's the global warming and the degradation of nature and the biodiversity that are transforming our economies and financial systems. So here, for central bank to qualify the mandate, of course, though, for fighting to target the inflation or to reduce the price or to stabilize the price, they will have to understand, adapt to the challenge that is from the climate change. Hence, the African continent is exposed to numerous climate vulnerabilities, but African continent, especially for sub-Saharan Africans, sub-Saharan countries, they remain poorly equipped to deal with them. Why for this? Because in many sub-Saharan countries, to combat climate change, we have to wait for the fund or the grant from, for example, from the IMF, from the World Bank, or from other donors that will help us to fight for the consequence of the climate change. So when we are waiting for that, for central bank, that the main mission is to stabilize prices, of course, to reduce the level of inflation. That would be a challenge for those banks, since the central banks, they will not have to wait for the grant from the donors, of course, from the European. So that will have to be an attention for central bank. So for central bank is in particular, the climate change here have been or has become an issue of renewed interest, as the climate shock could jeopardize the achievement of the monetary policy objective, in, for example, in the case of price stability. So since in many of sub-Saharan Africans, sub-Saharan economies, they will have to to fight against, for example, for the hunger, you know, when there is a consequence from the climate change, and they will destabilize the agriculture sector, for example, and for that, when the agriculture sector is destabilized, there will be a reduce in productivity. The GDP from the agriculture will be low in that case. So how a central bank can fight against or can achieve the objective of stabilizing the price, since the GDP from the agriculture, for example, is destabilized by climate change. So this would be a big attention for that. Just how can we, of course, to increase the productivity from the agriculture sectors. Okay. Also, the central bank versus climate change here, sub-Saharan African economy, sub-Saharan countries are not actively addressing climate change because of what? Because of it is not explicitly part of the mandate. So here I'm talking, for example, about that the policy that is related to the climate change in our monetary policy. When we are forecasting, for example, the inflation, when we are targeting the inflation of the next period, we are not focusing on the climate change policy. How will be the agriculture sector in the near future when we are talking about, for example, about the price of rice, the price of some cereals, the price of maize, for example, because in the near future we don't know. Maybe we don't know because tomorrow or after tomorrow there will be the change in climate. Maybe the big rain. The rain will come maybe tomorrow, and then all our production from agriculture are going with the flood, for example. So some economic variable like inflation is affected. Inflation because the price are increasing. Because some production from maize, for example, are not enough to satisfy the demand from the population. So when there is the demand not equal to the supply, you understand that the price will increase because of the low productivity. So inflation, the price will increase period by period. The productivity because not enough output from agriculture. The investment, about investment, you can say about, for example, when there is flood, and then they destruct, for example, infrastructures. They destruct infrastructures for economy. Of course, some buildings are gone. Some infrastructure for investment. There is no road. The quality of road. So the economy will not have investors that will come to invest in our country. So because there is a side of economy that is not working as we wish. There is an output gap. The international trade and employment are not easy, of course, because the low GDP, the low productivity, the low labor. So for that, the climate change will come to disturb all those. Macroeconomic balance and the financial stability, of course, are not at all at the level that we would want in our monetary policy. So in our Africa, exactly, only 17% of African central banks have so far introduced specific green financing products. For example, in the monetary policy, this one is estimated that only represent 2 to 20% of the portfolio. So you understand that is a big deal for Central African banks to make in the policies, the policies that is related to the climate change when they are rolling the monetary policy to target the inflation or to achieve the emissions by stabilizing prices. Okay, how these in general the African country are challenged by climate change. So all the African economics or African countries are not challenged at the same level or same shocks, but this is the different in particular to you can see here the map that we have here, the vulnerabilities, so that's the least vulnerable and very vulnerable countries in the red, and the green are least vulnerable. So that's the map illustrates the extent of the continent vulnerability to climate change, as well as the market difference between countries. Here I'm going with this, for example. Okay. For example, here we have in the Sahel. Sahel, of course, is above here. It's exposed to desertification, drought, and flooding. The Sahel, you understand, they are near by Niger, Chad, and some country there. So, but West Africa, in this part, where we have Nigeria and Senegal, Sierra Leone. So this one, that side, it's exposed to coastal erosion, rising temperature, and falling rainfall. Since in the Central Africa is the rising temperatures threatening forest, only that, and the Southern Africa, it's exposed to drought and the cyclone. And as you understand, the previous years, you hear about Eli and Kenneth that happened in the 2019, and a rise in 2021. That happened in Mozambique and Zambia. The catastrophe that happened in those years caused, of course, the GDP to decrease from, for example, from 2020 from 24% to 1%. That was a big problem. So this vulnerability, which is higher on the African continent, is due in particular to what? To the weak agricultural capacity. Since we are not producing, for example, in our agriculture to supply on the market or on the international market, so we'll be vulnerable. The African economies, the sub-Saharan African countries will be vulnerable on the side of agriculture. The weak. The people are here producing only just for eating. They are not thinking about investment in agriculture just to supply the market and they get maybe some money or some profit, and then to increase the revenue. Okay, because of course dependence on the rainfall, particularly for agriculture. We are waiting, for example, for the rainfall just to come tomorrow or in the near future. Just to begin our agriculture practice, we have to wait for this. So it means that we depend on the rainfall to make agriculture, just to the agriculture sector to be active. Okay, there is also we are vulnerable to the higher climate change because of the income from raw material export, the raw income from the material export. When we are exporting, we are not exporting enough. Burundi, we are exporting, for example, coffee and tea, and some like mineral resource, but not enough at all. Just to bring other resources from outside. We are waiting just maybe for one period when we are exporting some tons. Maybe that will not be the same as what will be exported next year, because the quantity is reduced over period. Okay, there is also a challenge of the growing demography that is challenging for the economy. So you understand, population in Africa, in some African countries, population is increasing period by period, and if we are not producing enough to fulfill those population, that would be the challenge for our economy. There is also inadequate social safety net and public service. Okay, when you were talking about inadequate social safety net and public service, we are not having enough infrastructures for education, for example, where we are needing the human to increase the human capital index, just to have the labor that have enough education or that they are skilled. So when the infrastructure for education are not enough, that is also the challenge for Africa. So for this all, the African continent that is vulnerable, that those sectors or those things that I already stated in here, they have to be forecasted, just how to increase, how to make agriculture be beneficial to all the population of African, and how can we challenge the agriculture not to be dependent always to the rainfall, but particular when there is no rainfall. For example, when there is the rainfall, Where's we don't have rain in one season, for example. For the next, what can we make? What is the challenge? What the new things that we can bring to that sector to be always active? For example, by taking water from somewhere, and then the drought can be combated in this period. And then how to increase the export sector, for example, to increase the product that can be shared with the world, of course, to bring us some revenue in our country. And how, of course, can we combating the demographics problem that we are having, the increase in population? How can we reduce, and what can we do with that? So this will be not forecast, of course, and even though it's not the role of the central bank also have to see those subsectors just to increase, or what is the challenge, or what are the obstacles in the monetary policy, why the emissions are not attained at a good level. So when they will have to see the agriculture, what happened, and what it is about the export sectors, and what is about demography, the population increase maybe, because the GDP, when we are taking the GDP per capita, we can see that problem, and the central banks can have the solution to those challenges, okay? So, and then why is Africa so vulnerable to climate change? Why? Because Africa is not emitting CO2, carbon gas. It's not emitting at all. It's not like the United States, or it's not like China or Qatar or India. But the continent is among vulnerable continent, and population here and people are suffering from the consequence of from those climate change. What can we do for that? Since there is always the COP29, there is some conference about climate change, but they are not involving those country that are having consequence from those climate change, because we Africans, we are vulnerable from developed countries. And so why? Okay, so of course Africa is particularly vulnerable to those consequences because its multiple stresses and the low adaptability capacities. From this image, for example, you can see that the buildings, the infrastructure that we are making are not, of course, how can I say, are not sustainable. We are building infrastructures, just maybe tomorrow we are thinking about moving. And how about the banks? Or how about our economy? Just to make our economy to be strong, okay? So from the macroeconomic impact, what we see here from the graph that I take from one author, from the button, so that is like an article on macroeconomic impact on African economy. It was 2020. This climate change have inside, we have extreme weather events. That's a rising temperature, extreme irregularity in the precipitation regime. And also we have environment conditions. When we are talking about environment condition, it's geography, initial weather, soil, flora, in the initial air and water quality. But we have to focus, on the extreme weather event that we are having in African economy, sub-Sahara economies. So this, it's presented, or it happens like natural disaster, flood, especially in many African economies, since we don't have enough infrastructure or the quality of infrastructures, the environment that we are having, the mountains, not enough trees, because of the issue of population increasing. We don't have enough land to cultivate. People are occupying those land that have to be like to protect our environment. So the flood are enough here to happen. The storm, hurricane, and the drought, for say, in particular, like a natural disaster that we are having in our economy. So all these are causing economic losses. Flood, when it happened, it takes all our agriculture, plants, and it flood when it happened also, it take all our infrastructure, the road are distracted at all. And the drought, when there is drought, because drainage phenomenon or program, maybe in the drought, we can do our agriculture to be active because of no water in the mountain. So we are living so far the river. And still here, when there is a flood, storm, hurricane, drought, etc., there is a consequence on our health. When there is no health, you understand that people are not able to work, so the labor productivity will decrease at all. And here, of course, when the labor market, when the labor productivity, the labor market not sufficient. We are not having human development index, that variable is low. And so when there is natural disaster, those I said here, flood, storm, flood, drought, there is a sectoral effect. So I said agriculture, not enough output from agriculture. Food, it means not available at the market. When the food is not available at the market in a good in enough quantity, the price will increase. And when the price increase, this is the side on inflation. Okay, so we are not having also energy or tourism when the energy it's related to the infrastructure because of not enough water available due to the drought. Okay, and after all this, the consequence that we are having is the economic growth. So the challenge or the point that the central bank are seeking to target is to see how the growth in economics in a special country, the GDP side, what do we have in the actual economy? So here, that is the challenge to achieve this economic growth by central bank. The central banks have to go above, to go through climate change shocks. What the shocks from the climate change that have to involve in the economic growth destabilized? How is the economic growth is destabilized by the climate change? So the central bank have to go through all those sectors or those point that I pointed in my presentation in this macroeconomic impact. Okay. So how climate change is considered as an economic and financial risk? Why is it financial risk? So in this, I try to divide into section because climate change, the transmission through physical risk to the banking sector. There is a physical risk, and also there is transition risk. That how this banks are affected by those. So about physical risk to the banking sector, of course, physical risk is related to damage caused to property, land, and infrastructure by extreme weather and natural disaster. You understand for this, that is the consequence from climate change that can happen to those infrastructure and property, land. I mean, the construction of a bank, for example, when there is a destruction of a bank, so you understand that will cause some problems to the credit risk, for example, or liquidity risk. So physical risk here, we have extreme weather event, extreme weather event that can have impact on bank operations, and chronic climate change that can have both to the impact on bank operation, impact on cash flow, and impact on balance sheets. So from the financial risk, the problem is the operation. And also another problem is about the credit. The credit that they give to the population when there is a problem of climate change. So people here, they will not be able to refund or to give back to the those today's bank that they provide to them the credit. So there will be a liquidity risk. The liquidity risk inside the financial risk because of the banks. They have their own liquidity, but since there was extreme weather or chronic climate change, for example, so here the financial sector will risk for the liquidity, and they will have to risk also at the end the market risk. Like when we say market risk, that is the sudden depreciation of securities held in portfolio. So the bank, that bank will have the bankrupt problem for this. So physical risk here, it may cause banks' assets just to diminish in value, and therefore risk of the loan portfolio to rise. For example, here, what I make here, banks could face significant risk to their mortgage portfolio if they provide capital to housing assets exposed to flooding, water scarcity, as has already been observed in Zambia and Mozambique cities during the Idai event. So I call it event, even though that is the consequence of climate change. So the properties could reduce the rental income and depreciate. That is the problem, because that is the question today, assurance, how to deal with this climate change when the banks give credit to the people, how assurance can protect them from that. I will be talking about this to the next one, okay? And we have transition risk to the banking sector. Transition risk to the regulation or regulatory, legal, market changes associated with a global transition to lower carbon emissions. Note that in this economics, in our African economics, we don't have this transition risk, because when we are not involving the climate change policy into our monetary policy, we can deal with the transition risk. So, okay, the impact that we can have to the financial risk, of course, it will be the same as the physical risk, credit risk, market risk, liquidity risk. So you understand in this that when some central bank involve climate policies in the monetary policies, so this will be impacting on the cash flows of the banks. When there is also the technological development just to fight against climate change, there will be an impact on the balance sheet, because banks will have to provide some amount to increase or to create new technology to fight against climate change. For example, there will be a balance sheet, there will be a problem in this. They will have to search for money or to collect some money from the customers. Okay, when there is a market change that is caused with this transition risk. Okay, so we have also to they have also to challenge the flow, the cash flow, the cash or the money that is available in the banks, because that bank would have to spend some money from itself or from its active. Okay, there is also, for example, reputation by combating climate change. There is the mitigation and the liability claims that will be from the flows. Okay, so here know that transition risk presents a challenge that is relative to paying for negative externalities produced by investees, company, or borrowers. Since this, I repeat again, since for African economists or central bank, the central banks of sub-Saharan Africa, we are not having this challenge about transition risk. For example, here, the financial regulators nudge banks and the financial institutions to incorporate greenhouse gas emission into the pricing of loans in the investment. At all, what I know in the central banks that I am working in, we are not incorporating greenhouse gas into our pricing and loan or investment. No, we are not having. But my presentation is about to just to suggest to the central banks to just to involve or take in account to reckon on this, just to incorporate some policies about combating just climate change consequences, because consequences are coming where we are not ready to eat the challenge. Okay, so what are the implications for monetary policy strategy? So for monetary policy strategies, because we are having the gap of production, GDP gap, for example, would be plus, would be like at the level that we are not waiting to have, because of the some sectors are distracted or are destabilized by climate change. This is the implication that the monetary policy will have. Okay, here I give an example. For example, when the central bank are projecting in the near future or tomorrow to have the GDP to grow at 2%, that is the projection, for example, by forecasting. And then we already have that solution. And tomorrow there is a change in the climate, growth, or the rain, all I can say destruction in the infrastructure caused by the rain. So you understand that the gap, what we forecasted was not ready, of course. But when we are involving climate policy into our forecasting, that will be a good thing by forecasting our GDP. So that will be difficult for central bank to offset as they pull production in inflation in substantially opposite direction. There will be rising price level, for example, upward pressure on food and energy price, while significantly reducing production capacity. So this type of shock is making central bank's interpretation of the output gap and deflationary pressure particularly complex, because central bank didn't involve the climate change into its forecasting. Okay. So in the central bank, in the prevention of economic and financial risk that linked to climate change, what can they do as general solution? Okay, because of the climate change in African economy is not only a source of economic risk, but also a financial risk in the Africa, not also only in Africa, but globally. So the ability of central bank to act effectively in this area depends on their independence. When the central bank is not independent, that will be exactly the problem to solve the consequence of climate change. But also it depends on the size of the financial sector that they supervise. When we are having, for example, in our economy in Burundi, we are having only 14 commercial bank. So 14 for commercial banks will the economy that we can say that we're having a bad economy due to the multiple consequences, not only from the climate change, but other external factors, because we are not exporting, and we are exporting not enough because of what we export depend on agriculture, and the agriculture is destabilized by climate change. You understand that the challenge, the climate change, is not having only the source of economic risk, but are affecting all sectors. But so the bank, to do this, would have to be independent. So there is also the links between climate change, monetary and financial stability. As I said before, climate change, monetary, policy of climate and monetary policy, just to be like to be in parallel. One take one to achieve the monetary policy of that central bank. They have to think also what is the policy of climate. Okay, so the time horizon of prudential policies is more favorable to the long term measure need to prevent the economic and the financial risk that is associated to the climate change. So in a global scale, this one, the NGFS has issued 4 recommendations for central bank and the supervisors to adopt best practice. So this is what I take from the Network for Greening the Financial Systems. Okay, integrate climate risk into financial stability monitoring and the micro-prudential supervisor, and also integrating sustainability factors into the management of central bank property portfolio, fill data gap relating to climate risk, build awareness and analytical capacity, and encourage technical assistance and knowledge sharing. So, of course, for many of the central banks, I think the first one is very important, okay, and not difficult at all to take, just to take precaution of this, just to integrate climate risk into financial stability monitoring, okay, when monitoring. So you understand when some banks are giving credit to the people and they are monitoring if those credits have not been distracted by climate change. So that will be a lose for that bank, okay? And for some researchers of central bank, they have to fill data gap or from some statistic department of central bank. They will have to fill data gaps or to fill data just to have up-to-date data on climate change. When they are forecasting the economics, they will have to take into account the climate change, okay? When there is availability in data, they have to know that, okay? And these are key monetary and prudential policy measures. That is internationally. I'm presenting this just for suggesting the central banks to involve this in monetary policy, or when they are analyzing the economy, or when they are monitoring the financial systems, okay? When on the monetary policy side, okay, sorry, they have to target the financing lines, differential reserve requirement, okay, minimum security outstanding quota for senior sector or maximum quota, okay. Those are points that have to be analyzed in the monetary policy side when it's about central bank. prioritization of credit to key sector by giving credit, for example, to when a country is living or is reckoned to the agriculture sector. When the sector of agriculture, for example, is accounting in increasing just to contribute to the increase in GDP much more than other sectors. So you understand that from the monetary policy to increase its GDP, just to stabilize the price, they have to see how can we increase the agriculture sector. So by increasing the agriculture sector, so they have to take priorities by giving credit to sectors. So agriculture sector will have to be the first to be considered. Okay, central bank assistance to development bank. Okay, when the central bank is giving liquidities or by making the policies or by controlling the missions, they have to take to reckon or to develop those banks that are combating, that are giving credit to the population, but those credits are secured by insurance or assurance, of course. So those banks that are in increasing the revenue of the population, like we have, for example, in our country, Burundi, we have BND, Banque Nationale de Développement, National Bank for Development, and also we have BCAB, we call it BCAB. That bank is helping population just to increase the productivity from agriculture. So the central bank have to consider that bank when giving or giving courage to that bank just to because of the priority of empowering agriculture or empowering people that are doing the agriculture or that are helping or that are giving the good level of our GDP. Okay, there is also the green bonds. The green bonds that can be accepted as a collateral. The green bonds here we don't have, and they, of course, only as I presented in the previous slide, only 17% of African economy have involved with this one, the climate change policy in the monetary policy. Okay, on the economic analysis, so they have to environmental risk forecasting and assessment model. Environmental risk forecasting, they can also forecast the environmental risk. When maybe we are having rain today, and what will be tomorrow, and how will be the consequence on our production. Okay, and we should have the models just to forecast that environmental risk that can have the consequence on our economy. Okay, environmental risk research and introduction of climate into macroeconomic model that are used just by central bank. Okay, central bank should have models just to use, just to be used when they are introducing the macroeconomic policy. Okay, on the own account investment portfolio, that is on business cycle, properties asset purchase program. This one is not for central bank, but what I was about to focus the only monetary policy and the economic analysis, because this one is related. But what is important is the central bank have to take in account the environmental risk forecasting and assessment model, and to assess the risk by introducing a new model, macroeconomic model, just used by central bank. And then by conclusion, I think this, because there was no data in my presentation, just to give suggestion and adaptive models that central bank can have by achieving the emissions, of course, by taking into account the climate change. Given this scale of the problem, as well the opportunities and the challenges faced by central bank here will have to strategically position themselves and prioritize action from the outset. Here we have, as a starting point, they must identify high-risk investment case where from external resources can be effectively leveraged to finance climate risk management, and they can also make use of existing experience as well as new and improved technologies for climate risk management. When they already have some experience from existing program, experience from Zambia, from Mozambique, or other countries that they have faced the climate change consequences. We can cope on this. I think to cope is not a sense, but when we cope, we are just bring new technology just to involve, just to increase our economy. Okay. The bank also can draw on experience both within and external to Africa to manage climate risk. With this, I think this is about the cooperation. When it's about Tanzania can cooperate with Senegal. Senegal can cooperate with Burundi, and Burundi can cooperate another country. And then within, we can get some new tools just to combat the consequence from the climate change that are coming to destabilize our monetary policy, of course, because we are not forecasting the level that we want. So current funding available for adaptation in development country does not meet the scale of the resource needed. When it's about the resource needed, of course, it's about money. When our infrastructure are distracted, when there is no road, we are just waiting for donors or grant from developed country, and for that we are waiting. When we are waiting too much, so we are being late in our economy. So this means that the bank must find the most effective ways to enhance climate risk management with the limited resource available. When forecasting inflation, banks there, of course, they need to take climate change into account. So attention to climate change in the design stage as matter of due diligence is essential, as retroactive climate proofing of existing investment will likely be more expensive. When it is expensive, we are just not still to wait for donors, just to have to use available strategies to continue our missions. I think that was my presentation about the climate change and monetary policy. When there is a question or some suggestion in this, you are welcome, and thank you for your attention.
Well, thank you for your enlightening talk. Yeah, so I have a lot of questions, but I'll try to keep it simple. So one of the things that came to me was, well, I haven't been to Burundi, but I've been to Rwanda, which is a pretty developed place, but also to Malawi and Central African Republic, and these places have a lot of farmers doing subsistence level farming, and as you mentioned, they don't really grow to export, but they grow to feed themselves. And there's pros and cons to a structure like this. The pro, of course, is that people, even if they don't have money, they have food, which is always good. The con, of course, is, as you pointed out, there's a lack of overall resilience. So I was wondering, how can central banks help build a resilience? Because as you also mentioned, it's outside the mandate of most of the central banks. But is there anything central banks can do now to help give additional credit to these subsistence farmers, or are there other actions that you're taking?
Yes, of course. Thank you very much. That question, because I take this topic because I know in our country, Burundi, for example, because we are reckoned on agriculture sector, the GDP is increasing because of the agriculture sector. So the central bank took the decision to finance the agricultural sector by giving, we call it what in French we call it secteur porteur de croissance, secteur porteur de croissance, just to increase the productivity from agriculture. The central bank finance that sector in a way that the output from the agriculture will do something from the GDP. So I think for other central bank, of course, because they don't know the decision or the monetary policy how is it conducting is not the same, and the objective is not the same. Or the mission of the central banks are not the same, of course. Also, my suggestion, like policy, when there is climate change, that is stabilizing the GDP to grow. I think they have to take that policy by financing the sector, the main sector that is contributing just enough to the GDP growth. Of course, that is.
Yeah, I think that makes sense. It seems that overall, countries could benefit from better economic planning and rationalization because just targeting GDP is not really enough. You have to also target goods and services that can help increase resilience and sustainability. So I think, I mean, that's not such an easy thing to do without changing central bank mandates, but I do think that there should be some kind of change in the way central banks operate to not only focus on the way things are being managed now, but also trying to build a more holistic society that is more resilient, because there is an overall lack of resilience in many developing countries, and it's hard to fix that without having the right monetary tools. And I think you would agree based on your talk. So,
Yes, thank you.
We had one member of the audience was asking if there's any mitigation plan for trying to prevent the expansion of the Sahara into the sub-Saharan region. I mean, Burundi is a little bit far, but I'm guessing that the neighboring countries are worried about desertification and want to try to find ways to mitigate. Are you familiar with any central bank policies in sub-Saharan region that are trying to specifically target this type of climate disaster?
Okay, so to tackle that climate disaster, of course, the first thing that we should have is the data that we are missing now, right? Because of most of the central bank are not working with the challenge for climate change. So when there is no data available in the monetary policy, it will be a challenge for the central bank to make the policy to be, of course, just to make the policy. So central bank should do some countries that they have that challenge of climate change, they have to make the data of climate change to be available. So when targeting inflation or when targeting to stabilize the price, so those data will be helping the policymakers to work on. So of course, when it's about, for example, in Burundi, we have 8% like inflation target, but we didn't just involve what will be the obstacles that will challenge to target that 80%. So because it was no data available. So my suggestion is banks don't have to be available just to make the statistics to be. So, and then of course, the monetary policy will take into account those climate change policies to forecast inflation. And for those countries from Sahel, for example, Sahel, like Nigeria, Chad, or those that are having most vulnerable to the climate change, they have to cope with those countries or with those central banks that are not having that consequence. Not at all. We have also some drought of food that have happened in Asia, for example. But the monetary policy is conducted in a good way. So when the Central Bank of Burundi, for example, will cope with the central bank from, like, say, Pakistan, for example, another country that have been challenged by climate change. So that central bank will give an experience how do they challenge with that issue of climate change, and now what have been changed by conducting the monetary policy just to achieve the emissions. So I'm always talking about Burundi because when Burundi will take into account that policies of climate change in conducting the monetary policy will be the new one. So that will be, for example, from here next year, that will be the new policy, because now we have the forecasting tools that we only focus on the Taylor model, only that. So, and the Taylor model doesn't include or doesn't involve the climate change policy. So maybe we would have the new tools to take into account in our forecasting. I think, yeah, it will be the best thing where the monetary policy will be taken into account. So, of course, I don't know how they will take into account in that monetary policy, but it will be a good idea if data from climate change are available. So, when we are making papers or research on the relation about climate change and monetary policy, we are not having data available to central banks. So that is the big issue that central banks have to work on. So when they will be ready, I think many suggestions will be come out through different analyses. Yeah. Okay.
I think that's a really good point. And data collection and analysis is going to be very key. And hopefully that's something that AI can help us with in the future. Anyway, we're out of time, but thank you very much for your talk. I think it was really quite interesting. I just got back from COP29 in Baku, and actually there are very few central banks there. The only central bank person I met was from Ghana. So yeah, it's not so many people from central banks at this event. So hopefully central banks will get more involved. Yeah, thank you very much once again, Jean-Baptiste Aboyitungiye.
An ancient prophecy foretold an eclipse that would open a portal to a mystical world, the world of Soratopia, where honor, valor, and swords determine your fate. You can become one of them. Choose your path. Become a true samurai. Explore the vast world of Soratopia. Defeat mighty bosses in various locations. Your sword is your strength and honor. Don't worry, you're not alone. In Soratopia, you'll find loyal waifus to relax with. Engage in the game, pray, complete quests, and accumulate points to become eligible for a massive airdrop. Your path determines your destiny. Choose wisely. The eclipse has awakened, and so have you.
You're still the sand on my skin.